The market had quite a strong rally today. Isn't that fantastic? Finally, some of our 10x growth stocks are doing fantastically well, and the tech sector overall is having a fantastic day. Quite a strange day though, and I'm not ready to get super bullish. And I'm remaining patient, although I'm also remaining largely invested. Why am I remaining patient? Well, the Fed is what matters most to me and what matters, in my opinion, most to the market, not necessarily Russia-Ukraine. But Russia-Ukraine is for the next week or two, or a couple of weeks until the Fed actually decides to begin moving, will continue to dominate the headlines. And let's just look at the last week or two in review. Last week, we were hearing Russia's withdrawing their troops. Ukraine says no war, everyone calm down. The United States was saying, oh, they're going to invade February 16th, etc. There's a lot of noise, just constant noise. And the market would rally on some calming of the noise, which, we recorded the video and said we didn't buy into that. And then it would sell off on a little bit more noise. And yesterday we finally got some concrete event that occurred after a previously concrete event, which was the sanctions. Yesterday we got the obvious invasion of Ukraine. And invasions don't take a day. They're not over in a day. We've sanctioned. And if you looked at the first round of sanctions, one thing was clear. They were not absolute. They were not super tough. They showed that if Russia acted one way, the good way, there would be no more additional sanctions. But if they acted the bad way, there was certainly more room for additional sanctions. That is the case today. Yes, the sanctions are tough, but they aren't absolute still. And considering the United States is correctly predicting a Russian invasion, my assumption is they're doing a pretty good job of when to apply the sanctions. And it seems that there will be more. There will be more Russian moves. And it's possible they happen today. This might have just been the initial first step in the battlefield. And I don't think any of us want to see more going on. But I'm just telling my opinion, which is that this is not over yet. Okay? The market is rallying strongly on the idea that, the sanctions aren't too tough, and therefore the economy is not going to be impacted very strongly. I don't think the economy is going to be impacted very strongly, okay? The market was selling off because it was afraid of the Russian impact on the economy. Then it shouldn't have done that. That was a purely emotional move. The economy is not going to be impacted very much, even if we get to maximum sanctions. I've said in all the videos discussing Ukraine that I don't think Russia-Ukraine will have an impact on the economy. And I'm not forecasting any sort of impact on the economy. Obviously, oil prices may do something. That may be the next level of sanctions. I expect, people to combat that with investing in new production, but we'll see. We'll see. But what Russia-Ukraine does do is it amplifies the movements of the Fed and possibly amplifies inflation, because now the Fed is in a very difficult position. They have to get inflation down. They have to do something. They can't put this to the side. They have to do something with regards to interest rates. So the money supply is going to begin to get more tight. The money supply getting more tight has pretty much always been not so great for stocks. It's possible stocks can continue to move. And I think there's a good chance the Fed does this in such a way that they avoid a catastrophic sell-off. But as I said in yesterday's video, which I encourage you to watch, there are still some stocks that I think are too expensive, and we're up today after being down massively in the morning. So I don't want to do a whole lot until I see some airflow out of those stocks. Obviously, do a whole lot, that's relative, because I have about slightly over 80% of my cash invested in the market. So I'm there. I'm in the market. I do have some cash that I'm trying, I guess, to time the bottom with. I don't feel ready to do that today. Maybe today, there is a probability that today was the absolute bottom. That could certainly occur. S&P down over 10%, NASDAQ down 20%. Reasonable declines. Certainly possible that it was today. But I think I can buy tomorrow, or the day after that, or the day after that, and be okay. And maybe I'll miss out on the little gains, but I think that's okay. I think there's quite a possibility of some more chop and selling, and I feel good about holding the cash for now. So that's what I'm going to do. I'm going to remain mostly invested, cash, might start nibbling on some stuff soon, but besides that, I'm not convinced today was the bottom. I'm not convinced this is the end of the Russia-Ukraine conflict. I'm not convinced the market is entirely prepared for the Fed. So for those reasons, I am not necessarily remaining on the sidelines, but remaining on the sidelines with my cash. I'm not afraid to deploy it per se, but very selective, not all at once, not all in, not all, this is the bottom, let's go in. I've done that before. I'm not doing that now. I think there's too many reasons for chop to continue. So that's today's video, and until next time, peace out.